Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 3rd, 2026, and we're diving into Amgen's fourth quarter and full year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Amgen has reported a strong performance for 2025, with significant growth in both revenues and earnings per share. I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Amgen reported a net revenue of $9.9 billion for the fourth quarter, which is a 9% increase compared to last year. For the full year, revenue reached $36.8 billion, up 10%. John, what are the key drivers behind this growth?
The growth in revenue is primarily driven by a 10% increase in product sales volume, although this was partially offset by a 4% decrease in net selling price. Additionally, 18 products achieved record sales, and 14 products exceeded $1 billion in annual sales, showcasing the strength of Amgen's diverse portfolio.
And what about profitability?
Amgen's GAAP EPS for the fourth quarter increased by an impressive 111% to $2.45, driven by higher revenues and lower net unrealized losses on equity investments. However, the non-GAAP EPS remained relatively unchanged at $5.29 due to higher operating expenses.
Product sales performance. Amgen's product sales performance is quite varied. Repatha sales increased by 44% to $870 million, while Prolia sales decreased by 10% to $1.1 billion. Can you explain these dynamics, John?
Repatha's strong performance is driven by a 31% increase in volume and an 8% higher net selling price. On the other hand, Prolia faced a decline due to an 8% lower net selling price and decreased volume. This reflects the competitive pressures and pricing challenges in the market.
Tezspire and Enbrel also showed contrasting results. What can you tell us about these products?
Tezspire saw a 60% increase in sales, primarily due to a 51% growth in volume. Enbrel, however, experienced a significant 48% decline, mainly due to a 35% reduction in net selling price, impacted by U.S. Medicare Part D redesign and increased 340B program mix.
Operational efficiencies and future outlook. Amgen's operational efficiency seems to be a mixed bag. The GAAP operating margin for the fourth quarter increased to 29.0%, but the non-GAAP operating margin decreased to 42.8%. What's the story here?
The improvement in GAAP operating margin is due to higher revenues and lower amortization expenses. However, the non-GAAP margin decline is attributed to increased operating expenses, particularly in R&D and SG&A, reflecting Amgen's investment in future growth.
Speaking of future growth, what does Amgen's 2026 guidance look like?
Amgen expects total revenues to be between $37.0 billion and $38.4 billion, with non-GAAP EPS ranging from $21.60 to $23. This guidance reflects their confidence in sustaining growth through their robust pipeline and strategic initiatives.
CEO's perspective and strategic initiatives. Robert A. Bradway, Amgen's CEO, mentioned strong performance and momentum going into 2026. What strategic initiatives are they focusing on?
Amgen is advancing a broad portfolio of innovative therapies with a clear path towards long-term growth. Key initiatives include the ongoing Phase 3 studies of MariTide for chronic weight management and cardiovascular outcomes, which are expected to drive future growth.
How does this align with their overall strategy?
Amgen's strategy is centered around leveraging their robust pipeline to deliver sustained growth. By focusing on innovative therapies and expanding their product portfolio, they aim to address unmet medical needs and enhance shareholder value.